what is this 5-to-1 split and the timing and all that, if you don't mind, and then dive in. I guess give your advice, and we'll put our disclaimer up here as well that we're not financial advisors.
It's not financial advice because none of us are certified financial advisors.
Exactly. Yeah.
If you need specific advice about your financial situation, speak to an advisor.
Yeah.
Our lawyers made us say that.
Perfect. Mm-hmm. That's perfect. Perfect intro. I mean, the 5-to-1. So Tesla IPOs at $15 in 2011, 2021. Now they're 1,500 or whatever. It's just way too high. Like, this is what companies do. The stock price is too high. They split it. The options are too expensive. It's too complicated for people to buy it because now I need $1,500 for each chunk or whatever. It's just really simply like if a stock appreciates 100x, it's probably going to do a split. That's why like Apple's been doing several splits as the share price goes up. Like, it just makes it more accessible. So I actually don't think it's that big of a deal, to be honest. Like, it's a big deal because Robinhood traders can get more hyped about it because it's easier to buy shares, I guess. And it might be like easier access to the S&P 500 maybe. Sorry.
Mm-hmm. Very good.
Actually, that wasn't a really good answer. But I guess my big takeaway from this is like, okay, Tesla does the 5-for-1 split. It doesn't really change anything, makes it a little easier to buy. But like, to be honest, I don't care about it. And I'm kind of over the hype about it because it just doesn't change what's happening at Tesla. Like, I'm a fundamental investor. It's like, what is going on at Fremont? What's going on in Shanghai? What's going on in Austin? Like, what is the day-to-day at Tesla? That is going to influence the value of the company. Whether the stock price has 200 million shares outstanding and is at 1,500 or has a billion and is at 1/5 of that just doesn't matter to me.
So I know for you, the stock split, how that ratio breaks out doesn't make any difference. But it seems the way the market has been responding suggests that for a lot of people out there, it is mattering, right? Because we've seen, a 20% rise, 25% rise in Tesla stock since the split. What do you think's all driving that?
So I think there's a really big misconception that because a stock is increasing, you have to go back and retroactively try and find a piece of news to rationalize that stock move in your head. This is what everyone does. Probably CNBC's fault that this exists. Like, Tesla stock's up today because of this. You don't know why it's up. I saw an article today. They're like, why is Tesla stock up 15% for no reason? It makes no sense. Like, the stock market's psychology. Like, I think it makes perfect sense. Tesla's been crushing it. Their technology gets better every single day. The market's going to wake up one day and realize that month of progress they should be priced in, whether it's today or tomorrow or yesterday or, I think it's not because of the split that it's going up. It's not because of Wedbush's price target increase. It's because Tesla is about to change the world and more people are realizing that every single day and are learning about the technology and products and services and are investing in it because they think it's undervalued at this price. It's like a long-term sort of like market economic psychology leaching into the equity price, giving it that valuation, not these like short pieces of news incrementally moving it perfectly. Like, I just think that whole like, I'm not saying that's what you're thinking, Eli, but like I've just been seeing this in the news. That's why I'm trying to go on this rant of like, just because Tesla stock's up 10% doesn't mean there's a piece of news that popped it or.
Yeah, that makes a lot of sense. Like, unlike you have moments where clearly the stock's moving because of earnings got released or deliveries got released, right? Profit beats, missing expectations, etc. The market absolutely does move in ways that do not seem logical. And I love that you said the CNBC effect, because no matter what happens in the market, when you said this early, the market could be up 0.85%, in 1%, or be up 1%, end up only 0.85%. And they will have an explanation for why that was, even though it's impossible to accurately track down in such a large economic system what the true source of some of these moves are. So that's a good take.
Exactly. And I would say if you think the second you think you know anything in the market, like, you're already wrong and have lost the game. You don't know anything. Like, everything could be, so when I hear people like the certainty of like, this is why this happening, like, that to me is like a huge red flag of like, you obviously have no idea what you're talking about. So that's a piece of advice I would give to people.